Hey guys, today we're going to do a conglomerate stock, and this is going to be Berkshire Hathaway. And I specifically chose the Class A shares just because of the price, $362,500 a share. Now, the average person is not going to trade that. The volume is incredibly low on this. If we look at our average volume on this, it's about 300 shares traded per day. So there's not a lot of this flying. But to me, that doesn't really make a difference because what we're looking for is patterns. Pattern recognition is what I'm trying to teach to you guys. And it really doesn't matter what the stock price is. So if I could teach this and just, in my ideal world, I would go like this and get rid of all the stock pricing so you guys didn't know what it was. And yep, I'd get rid of this. And so you can only see the bid and the ask. Let's get rid of the pricing. So the pricing becomes important, obviously, when you need to know if you can afford a $360,000 stock or not. But my point is, the pattern, once we get rid of that, everything on here all looks the same. We still have to fight through moving averages. We still have resistance. We still have support. We still have things going through the sweet spot, going sideways, sweet spot reversals. So that's something that I really want to drive home, and the reason that I chose this stock specifically. So let's start with the long-term chart and go from there. So obviously, they had a nice run up and they went sideways for quite some time. And they dropped into short-term, they dropped into somewhere what would be a short because they dropped into that sweet spot going in the opposite direction towards the negative. Yesterday, what day is today? Wednesday. Monday, they did a sweet spot reversal and started to go back towards that positive long position. And that's because we had some great buying volume coming into the stock for whatever reason. Now, yesterday we had this candle right here, which is an upside down hammer. And if you guys remember from my candlestick videos, which is in the Trading 101 playlist on the Everything Money channel, upside down hammers typically mean some kind of change in direction. But we didn't get that today. So we actually got a little bit more going positive today. We kind of broke through this resistance point. So let's see what happens. This is not necessarily something that you can throw a tracker share on, but remember the point of this is if this was a more affordable stock price-wise, you could go ahead and put some kind of tracker share on this. And what we would be waiting for is this today, a big green candlestick, or if that didn't happen and it stayed like this tomorrow. So a green candlestick with some kind of follow through. The great thing is that we've cleared this resistance. So unless this thing pulls back down here, then we're going to be okay. Let's pull up a line chart and just see if we're getting any nice W formations on our long term. And we are. We're getting some great W's. The right side is higher than the left. Here's a great W right here. So if we can get some kind of pullback like that, and it can just keep going. But you can see the point that I'm trying to drive home. This doesn't matter, this stock price. You still have your W's. You still have everything that happens on a stock that's 10 bucks happens on a stock that's $360,000. So let's go over to the swing trade and see how we would trade this on a swing trading level. And like I said before, we had great volume yesterday. Hopefully we can get some buyers coming in today. Our stochastic is above 80%, it's doing great. It just had a nice run. We're above all four of our major moving averages. And the thing that I like the most about this today is that here's this resistance of 360,338, and we have definitely broken through that. It has had a little bit of a engulfing candlestick. I'd like to see a little bit more, but this is something that is perfect right now, and our pattern is lining up, and everything is going well. So let's just keep an eye on this and see. I'm going to go to a 15-minute chart now and see how we can day trade this. Now, obviously, not many people are going to day trade this stock. I don't even think that it's smart to day trade this stock just because the volume is, it's ridiculous. So let's actually look what the volume is on the first candle, which was the highest volume of the day. Our volume was 38 shares traded. The second one was 21 shares traded, and now in this 15-minute candle, we have 14 shares traded. So a stock like this doesn't really have the daily volume to be an efficient day trade, but let's see anyway. So we're teaching patterns, so that's all that matters. So we did have we have all selling volume coming in. And the biggest thing to remember is when we're shorting, which is what we're going to do on this kind of day trade, just because we're coming down with it, we need to be under 20% on our stochastic on the bottom. So we are not trading anything going short until this stochastic breaks through 20% and just starts going sideways. And that's exactly what it's starting to do here. Just like when we're on the top, we have to be over 80% and stay above 80% going sideways. On the bottom is totally different. So this is different than when you are on a long-term chart or swing trading chart. You want to be within the sweet spot range. This one, you want to be outside of the sweet spot range because this guarantees the highest probability of you making money and keeping money. So if we're going sideways under 20% and all of a sudden this thing starts to creep up and go towards, say, 25, 30%, people ask me, when do you take your profits? That's when you take your profits. If you do that, you will not lose. Don't get greedy, and when it gets up towards 40%, say, okay, well, this thing can turn down. Exit the position. Once it drops back under 20%, take your money and put it back in there. That's what day trading is all about. It's about grabbing pieces of money when you can. It's not the same thing as a swing trade when you're holding and saying, okay, well, this might hit resistance and this might bounce up off support, this and that. No. Put the money in your pocket while you can, and if you have to, buy and sell that thing 3 times within a day. It really doesn't matter. Just make sure that you're putting money in your pocket. So that's my big takeaway on something like a Berkshire Hathaway Class A. I want you guys to understand that all of this is just about patterns. We need to be identifying patterns. Stock price doesn't matter. Stock price matters when you need to know how much you can afford to buy. That's when stock price matters. So I want to do 3M. And the reason that I want to combine Berkshire Hathaway Class A stocks and 3M is because they're both conglomerates. My point in doing this is one is worth $360,000 and this one is $181. So again, everything in charting is all about patterns. So I'm going to go through here, and this is what I would like to do. Just blur out the stock price. And we're going to be looking at the exact same thing. We see our bid and our ask. And let's get rid of this. And this is how you should trade. Stock price matters, again, when you need to know how much of a stock you can afford. Probably not that many people can go in and afford a $360,000 stock, but a lot of people can afford a $181,000 one. They're setting up the exact same way. So let's get into it. We're going to do, long-term swing trade, and we're going to do a daily chart. So let's see what we got. This is actually perfect. We're coming right through the sweet spot, moving up beautifully, red over yellow. We have some decent volume, nothing great, but we have great candlesticks moving up. And I just want to check our line chart, see if we have. So we've created some beautiful W's coming up. And I'm expecting that this is going to probably pull back a little bit, probably to this 178.75 range, which is support. And then it'll create another W going upward. And this will be a tough resistance point to get through. So we shall see. But this is a wonderful chart. And this is the importance of throwing a tracker share on. So when we were back in this range, where your stock price was falling, you were kind of getting into, you got below 32%, you were getting into that oversold region. I always talk about overbought. Being underneath 32 is oversold. That's when you go ahead and throw one tracker share on there and see what happens. And right when that trap door closes, and if you don't know what trap doors are, go to the Stock Trading 101 playlist in the Everything Money YouTube channel. I talk about trap doors. Once that trap door closes, you could definitely throw some shares on there. Throw a tracker share on right when you get some good engulfing candlesticks, add to it, and you're on your merry way. So 3M is looking great right now from a long-term perspective. Let me zoom in here a little bit just to see when I would be adding to it. So I need an engulfing candlestick like that. So if I can get that today, something like that, or if it stays like this and I can get a good green candlestick tomorrow, that would be awesome. I would ideally like to get through 183.13 for the price, and I I would be happy because I would get through that resistance and start moving up towards this next resistance point, which is just over 186. Now, the one thing I do want to point out is our bid and our ask difference. And the reason I keep pointing this out is it's something that you guys need to pay attention to. Excuse me. When you have big spreads between your bid and your ask, there's something funny going on. Let things calm down and just be patient and let the trade come to you instead of trying to force something. So let's go over to our daily chart and see how we can do some kind of swing trade on this. The great thing about this is that our trend is moving upward through the sweet spot still. We're over all four of our major moving averages, which is very important. I expect, unless we get a big rush of volume, like maybe these three volume sticks right here, unless we get something like that, we're probably just going to consolidate in this range between 183.13 and 178.75. So let's see what happens. We did maybe last week, 2 weeks ago, we tried to break out and the stock price fell back down. Now that's fine because it's going to create that W formation for us to just keep going higher and higher. It created a nice support line, and that's why I always say we want pullbacks, we want snapbacks. Snapbacks create W's and support, and they're perfect for our trades. So keep a watch on this. Take your profits going into 183.13. Always take your profits when you're doing swing trades. That's the goal. Just wait for something good engulfing candlesticks to move up. So let's head over to the 15-minute chart. This is a much more practical trade of instead of trading a $360,000 stock on a day trade. So let's see. So what I really notice right now is our morning was okay. Nothing really happened. Starting at 10:30, 10:15, we had a nice drop in the stock price, and that reflected with a little bit of selling volume in that 15-minute frame. We have even more right now, and we're getting some other selling volume. The thing that I really like is that our stochastic has finally broken through this 20% area. We've moved into this region, so if we can just stay going sideways under 20%, let's keep shorting this and keep adding to it. Hopefully, we have 2 minutes left. It's 10:43 a.m. From 10:45 to 11, we're going to get another candlestick. Hopefully, it looks like something like that. I talked about Bollinger Bands. Our Bollinger Bands are starting to open up. So that does give me a little bit of foreshadowing that there's a lot of selling volume coming in, as you can see right here, and that this thing can definitely open up and might be a great short for the day. But once that thing goes, if it goes sideways and it crosses above 25, 30%, get out of that thing, take your profits, and then see what happens down the road. You can always go back and invest in the stock. So biggest takeaway from this entire video of Berkshire Hathaway and 3M, the two conglomerates, two massive conglomerates, is we need to treat them the same. The only time that price matters is how much you can afford to buy, how many shares you can afford to buy, or if you can even afford to buy one share. What matters is the pattern recognition. From what I've showed you, they're exactly the same pattern. Well, they're not exactly the same pattern, but you identify their patterns exactly the same. And that's what this is all about. It's repetition, repetition, repetition. Whether stock is 10 cents or $100,000, it's going to be the same pattern recognition. So if you guys like this video, join the Mo's Muscles Patreon group. I'm answering questions all day. You saw me change over from Virgin Galactic to 3M. That's what we were talking about at that moment. I made a short video for somebody because they were holding it, and that is also a beautiful day trade going on right now, and I think some of our members are doing that. So hop into my Mo's Muscles tier if that resonates with you, and we'll get going from there. Have a great day, guys.